Hello everyone and welcome to another episode of the Clement Consultancy Educational Series. And in today's episode 24, we're going to discuss about why real estate prices will drop. And this is a very interesting topic, especially for buyers who are actually waiting on the sideline, waiting for market to collapse, waiting for recession, etc. and adopting a wait and see attitude to see whether prices will drop. So let us really explore what are the factors that prevent real estate prices from dropping. Okay, so over here we're going to understand why real estate prices will drop and the key factors that causes prices to increase instead of dropping. And we also like to understand the future land costs and construction costs that will have a significant impact on the real estate prices. So one of the most important fundamentals is actually demand and supply. And I think most of the information here in these notes are really self-explanatory. So I'm just going to share a few point by point, and these are the research that I did why real estate prices will drop. So demand and supply. And of course, we over here we also know that there will be a period where there is decreasing supplies or stocks in the market, especially when there's so much pent-up demand by the buyers to buy the new launches and in the resale market. And we also can see that there's a strong demand from the upgraders and condo downgraders or HDB downgraders as well. Future land costs, which we'll discuss later, and of course the higher construction costs as well that actually add on to the factor of the price increase in real estate. Yeah, over here we know that the unsold balance stock actually fall to 15,000 units. You can see at the start of 2021 quarter 1, right, the stock supply is actually on a high around 7,000 to 6,000 units, totaling around 36,000 units in 2019 period. And subsequently, this balance stock keep on dropping. That till 2022 quarter 2 period, right, in the core central region, there's a balance stock of around 6,000 units. The rest of core central region 5,000, and the outside core region around 4,000 balance units. Okay, so the take-up rate has also pent up increase at 2.93, 1.48, and 0.78 over the years. So later we will explore what does this really mean. Okay, another thing, the key factors that causes prices to increase, ABSD has caused a reduction in the resale supply. So for multiple owners who has property for stay and for rental, right, this ABSD deny them from purchasing more properties because of the higher tax, and this tax has increased from 12% to 17% for the second property, and for 15% to 25% if this Singaporean own the third property. Also, like I said, the information here are all self-explanatory. And we also note that there's actually a pent-up demand from HDB sellers as well. Okay, so in 2012, right, we saw that the HDB peak. That is where a lot of HDB exchange hands and they actually got good profit. And they move on subsequently to upgrade themselves to condominium. And in 2022, we saw that the resale price index has also overshot by the 2012-2013 highest peak margin. Alright, so that is a significant demand from HDB sellers who sold their units, and of course they will buy another HDB unit or to buy a private property. We also see that there's an increased demand from purchasers made up of foreigners and PR, especially in the core central region and rest of core central region. Okay, we can see there's a strong foreigner presence in this area, RCR, and it has increased month by month. In the CCR, increased month by month, and in the RCR, increase as well, and a significant big increase in the OCR region. We also can see that Singaporeans make up the bulk of the purchasers in these three sectors over the years, and it has been quite consistent as well. Alright, another factor that causes prices to increase is the higher land cost. I actually screenshot here 3 government land sales released by the government in different years. So you see that in 2016, right, the land was actually sold at a break-even price of $932. 2 years later, in Whistler Grand, it has inched up by around 40% higher, closing around 1,300. And 4 years later, which is March 2022, we can see that this break-even price has significantly gone up by a further 30% as well. So we can see that the initial launch in 2016 was around 932, but it has gone up to $1,646. So for people who are waiting on the fence line, this is one of the factors that push up prices. Higher land prices will translate to higher purchasing costs for the purchasers. So there's a saying, purchase real estate as early as possible and hedge it against inflation or for capital gain. These are actually explained in my previous episode. Okay, so I actually took another one, the EC prices. This is a hybrid for Singaporeans, where the property is built by private developer but governed by HDB regulation. You can see that in 2016, River Cove Residences, the break-even price was 686. And 2 years later in 2018, Park Canberra, this EC, break-even price went up by close to 40 to 50% at 976. And it subsequently inched up further in the March period 2022 at 1,134. You can see that that's close to 2 times price increase. So as mentioned, the land price actually contributes to what is actually one of the key factors that causes prices to increase. Okay, like it or not, this is the way that it actually goes. Okay, of course, in the newspaper, we also saw the higher construction costs and labor costs for construction industries. So this is inevitable. All right, so people are vying for manpower. Cost of material has also gone up significantly. These are some of the factors that causes price to increase as well. So I actually took this from the government website. It's actually a comparison between HDB resale price index versus private resale price index and the MAS core inflation. So let's look at the MAS core inflation. Inflation actually goes up on the steady line, comes up from year 1990 to year 2020. But we can see that the HDB prices and private prices, right, has inched up further by a greater margin. So let me use a red pen to draw. Inch up by a greater margin. So that is why people say property is a good hedge against inflation, because why? The prices climbs higher than the normal core inflation as denoted by the MAS. And this is really true. You can see how fast how peak the prices has gone over the years since 2005 period. You see, prices actually perform very, very high. And of course, this is during the Lehman Brothers and COVID brother periods. And COVID-19 period, okay, sorry. Yeah, COVID-19 period is actually over here, 2019, and this is the Lehman Brothers crash. Okay, so I hope this information are useful to you. Like I said, the information here are really self-explanatory. There isn't much for me to explain. And if there's any question or comment, please feel free to drop down in my YouTube channel. And I'll see you very soon in my next video. Take care.